We're going to move into the first of our two keynote addresses this morning. Our first speaker is the Governor of Bangladesh Bank, Dr. Atiur Rahman. I'll give a brief bio. He studied at Mirzapur Cadet College for his secondary and higher secondary education and followed with undergrad and graduate degrees in the Department of Economics at the University of Dhaka. He achieved academic distinction at all levels and went on with the Commonwealth Scholarship to study at the School of Oriental and African Studies at the University of London, where he received a PhD and a master's and PhD in economics. Prior to his assumption of the office of the governor, he was a professor of economics in the Department of Development Studies at the University of Dhaka and chairman of the board of trustees of Shamunnoy, Center for Excellence in Development Research in Bangladesh. He also served as the chairman of the board of directors of Unnoyon Shamunnoy, a nonprofit organization for research, development, and cultural learning. His previous roles also include director of Sonali Bank, the largest commercial bank in Bangladesh, the chairman of the board of directors of Janata Bank, the second largest commercial bank in the country, and a long tenure as a senior research fellow at the Bangladesh Institute of Development Studies. Please join me in welcoming Dr. Atiur Rahman to the podium.
Thank you for a kind introduction. Professor Munir Quddus, President BDI, Sanchita Saxena, Executive Director, Institute for South Asia Studies, Director, Chaudhary Center for Bangladesh Studies, University of California, Berkeley, Ashiquzzaman, other distinguished guests, ladies and gentlemen. Firstly, I want to thank the organizers for putting me in this circuit. I have been invited many times, but I could never make it. But this time, I struggled hard to make it. I was having a UN program, so I could really, leapfrog it, I would say, and jump in here. Anyway, I see many of my colleagues from my sector, financial sector, many of the CEOs, probably they will complement what I had to say here. I wear many hats, but today probably my hat as a central bank governor is more prominent, although I would have liked to be more introduced as an academic. I have always been so. Unfortunately, suddenly I was picked up as a governor when I was not in the country, so I couldn't tell it. But this has been a very rewarding journey over the last almost 7 years, and it has been, I would say, a paradigm shift in my own thinking and discourse, that so many things can be done even in an odd circumstances if you really are focused and have the core leaderships built up in an institution, and you can even transform the institutions if you have your friends around. And I see at least Dr. Sadiq around, who is one of my board members, has been a great support to me, and we are working together. You are indeed, as Munir has said, Bangladesh is a story still to be told. A well-kept secret, I would say. To some, it is an unfolding surprise, a land of impossibility despite many odds. However, the storyline of achieving aspirational goals of our ordinary, hardworking people, and from there, many of the new entrepreneurs, the new generation of entrepreneurs are coming forward, is indeed an amazing story, actually. I would not have, come nearer to this story unless I was put in this place, because every day I interact with those heroes of Bangladesh who are making Bangladesh so proud, and how things are really evolving in the sector. as we will see, and yesterday we were talking about, Dr. Sadiq was giving an indication that all the macroeconomic indicators are not only growing and remaining stable, but are also potentially can go far. That's the potential if we can manage governance and other issues. Actually, there is a huge potential for Bangladesh story. Even whatever we have achieved, whenever we present it more objectively to the international audiences, which I have the chance to do it. As I said day before yesterday, I put 2 presentations in UNDP headquarters and also UNDESA. They were all surprised that Bangladesh is doing so well, in such a situation. Even the other day, the chief economist of the World Bank, a well-known academic, Kaushik Bosu, said that even 10 years back, he could not imagine that this Bangladesh could be possible, actually. So that's what I said, it's a land of impossibility, even things are unfolding every day in a manner, nobody really can guess. And all, I would say, most of the credit I would give to the hardworking people, the farmers, small and medium entrepreneurs or women entrepreneurs, and of course the leaders, how bad you can call them, but unless you give the semblance of the leadership and the kind of environment, even in a light touch regulations, I think people could not have gone that far. Anyway, I like to speak on the role of the central bank in development, and I really want to call our central bank in Bangladesh a developmental central bank. We are out of box, and that's why it's getting so much of attention, particularly if you put in the perspective of the global financial crisis, then the role of the central bank becomes so important. When I joined as a governor in the early 2009, we ended up in the middle of the financial crisis, and sometimes we were also, I would say, surprised that how Bangladesh really managed and coped with this global financial crisis without much of a scratch, I would say. So that's how we will talk about the strategies which we really took to make this possible. The rounds of post-global financial crisis, large-scale quantitative easings in advanced economies have achieved little in shoring up flagging global growth, instead debilitating monetary policy and creating deflation risks by driving down interest rates in major currencies to near zero levels. The hope that faster-growing emerging economic groups like the BRICS will take over global growth stewardship has also been dimmed. Global trade growth slipping below the sluggish global output growth has further deepened the gloom. Bangladesh, like other inclusive growth-focused developing economies, has therefore gone about upholding growth with measured, moderate monetary growth proportionate with real output growth expectations, alongside guidance for lenders in channeling the financing inclusivity into output initiatives in all economic sectors. This attention to directional guidance has helped firm, non-firm MSMEs, that is micro, small and medium enterprises, flourish in rural and urban communities, augmenting domestic output on the supply side and incremental employment and income on the demand side. And this has been happening despite or in addition to our conventional kind of focus which we have been putting on our export-led growth in RMG sector and also on the non-RMG sectors, although there are anti-export bias in the non-RMG sectors, as Dr. Jayadi Sattar was telling yesterday. And we are all working hard to remove those biases so that the industrialization process which has started, can go. Even 20 years back, people never thought that the Bangladesh will become the second largest, exporters of apparels in the world, because, so that's as I said, that's the story, surprising story, and we are not coming out of, because we still have a space for a couple of decades. We can make best use of that route, but in addition, we really want to really prepare the ground for domestic demand and also combine it with the other arms. Bangladesh Bank's development initiatives I'll share now. Besides maintaining macroeconomic and financial stability, Bangladesh Bank has also been supporting rapid, broad-based, inclusive economic growth through its multi-pronged financial inclusion initiatives. Bangladesh Bank's engagements to inclusivity and sustainability is direct and explicitly pronounced in its monetary policy statements. Probably ours is the only monetary policy statements in the world which explicitly talk about financial inclusion, financial stability, and sustainability, sustainable financing, including green financing, environment and social risk management guidelines and risk gradings and all that. The motivational thrust of ingraining a socially responsible financing ethos has sensitized the financial sector in reaching out to the underserved and excluded population segments with the financial services they need. The CEOs as present here will support me in complimenting that many of them too we are not sure where I am leading them. I took them all out for a road show from Teknaf to Tetulia, roaming around the country for 5-6 years back to tell the people to do what is on the ground, because we need to change the ground. And so we went to the farmers, to the entrepreneurs, small entrepreneurs, and after a while, our investment in them became a business case. It was not a philanthropy, it was not a charity. The farmers were a business case. Putting money for the farmers was a business case. Putting money for the SMEs was a business case. Many of the Western countries were creating money in the air. We were creating money to put it on the ground, and seeds really then gave us the plants. And that's why our economy is so stabilized and so, I would say, well-grounded. The thrusts are on output initiatives in agriculture supporting food security and price stability, SME financing promoting output, employment and income generation, green financing supporting environmental sustainability, and digital inclusion facilitating the digital Bangladesh vision of the government. Would you believe it? 6 years back, Bangladesh Bank and the banking sector as a whole, except few private banks, was the least digitized sector in the country. And today I can vouch is the most digitized sector in the country. Every bit of our financial transactions are being digital. Bangladesh Bank itself, its digital infrastructure is a state of the art. The very last one we did, the real-time gross settlements. Our payment systems is absolutely modern with the national payment switch in place, online credit information bureau, automatic clearing house, and whatnot. I would say mobile financial services, everything on a digital mode. There was not even one e-commerce site. Now thousands are spreading, even in the villages. So these are the kind of mind-boggling transformation taking place in Bangladesh, which deserve to be documented. Process documentation is needed, and researchers like you should send your interns, students to really study Bangladesh and see for yourselves what is happening on the ground. In recent years, Bangladesh Bank has brought about deeper engagement of the financial sector in the development role with a social responsibility-driven financial inclusion drive. Accordingly, Bangladesh Bank has taken up comprehensive reform and upgradation of the country's financial markets infrastructure, including setting up a fully automated nationwide online clearing and settlement system, Bangladesh real-time gross settlements or RTGS, hastening automation in banks, including the public ones, the public banks, which people think that they don't move, but we are making them move, forcing them to have core banking solutions in every branches. And this is Bangladesh Bank is leading that campaign. Launching of mobile financial services, more than 28 million bank accounts have been opened on the mobile financial platform. Today, no frill accounts for the disadvantaged and students. We call it 10 taka account, about 12 cents account. The farmers, all farmers now have account, which is about 16 million plus. Mandatory credit for agriculture, SMEs, renewable energy, and so forth. When I say mandatory, we give a target. If they don't miss the target, we take away the money which they don't really give it to the people, put it on a reserve without anything. So the banks now, next time, banks come in with full force. The recent financial inclusion initiatives are supported by advanced technology, which has drastically reduced costs, increased the reach, and allowed new players to leapfrog constraints. And we are constantly creating entrepreneurs at all levels, particularly the smaller ones. The stability outcomes. Output growth-focused directional guidance in inclusive financing has helped Bangladesh maintain steady, stable spell of 6+% real GDP growth for well over a decade, which is around twice the rate of global output growth. In fact, as Dr. Sadiq was telling, last 5 years growth is 6.3%, and this year we are certain to grow beyond 7%. This is for the first time Bangladesh will get into the new paradigm of 7+ growth. Bangladesh, over the last decade, Bangladesh economy had the least volatile GDP growth and inflation in South Asia. Not only that we are having higher growth, our growth has been very stable. Standard deviation of the growth variations or the inflation variations, ours is the least, not only in South Asia, but also among the peer groups which have been rated by Moody's and the Standard & Poor. If you compare it with Guatemala or with the Philippines and others, ours has been the most stable growth. And what is good about our growth is that all the three sectors, agriculture, service, and manufacturing, growing in tandem. It's not that one sector is growing and others falling. No, it's all three growing in tandem in a very stable manner. So that's the punchline of our Bangladesh growth story. Further, the growth performance is quite inclusive and balanced, reflected by steady growth in all economic sectors, as I said, and also as you saw in yesterday's Dr. Sadiq's paper, it's our Gini coefficient remains stable. Consumption Gini sometimes have gone down. In fact, that only tells you that people are sharing the cake. The real wages in agriculture has gone up over the last 6 years 4 times. An agricultural laborer would fetch 3 to 4 kilograms of rice with 1 day's wage. Now they can fetch 13 kilograms of rice. So that gives the real kind of strength that the cake is really being shared. Stable, downward edging CPI inflation, now about 6%, which is about 12% in 2011. Low single-digit fiscal deficit, as you saw yesterday, is always around 3-4%. And strong gains in external sector viability with appreciation pressure on taka. Ours is a very different case. We are really baffled with the how to manage surpluses, not deficits in Bangladesh. That's a huge story. That when we started 6 years back, we had 2 months worth of import of foreign exchange reserve of around 7%. Today, it is 27 billion plus 7 months worth of input. So that gives you, and now my challenge has been how to manage it, how to keep the taka, rein the taka on. So that's a story not in any other places around. The positive export growth amid demand weaknesses in external markets. In fact, the remittance has been a great help for us. This year, we are expecting around $16 billion growth. And as yesterday I couldn't respond to it, I think most of the remittances are coming through formal channel. And our introduction of the mobile financial services has added the last mile advantage. The beneficiaries of the remittance are getting all the benefits in a couple of minutes time because of the presence of the last minute mobile financial services. So that has given us the encouragement. And also ours is a very low cost kind of remittance transfer. We have given so many exchange houses, so many correspondent relations, and our banks have really moved into international markets, so they are attracting the remittances at a very low cost. So that gives us an advantage. The buoyant foreign exchange reserves, as I said, and remittance inflows are the defining features of Bangladesh economy. Socio-economic performances are quite exemplary. Bangladesh achieved most of the MDGs well ahead of time, with rapid fall in poverty from 48.9% in 2000 to 24.5% in 2015. Our life expectancy is at least 4 years, higher than our biggest neighbor. So that also reflects, that the money has really gone on the ground and people are benefiting out of it. So with that kind of background, let me now talk about the way forward. How do you, strategize to go forward? The performance of Bangladesh economy is grounded on very inclusive and broad-based nature of growth, which already earned much global recognition. Now our goal is to deepen, widen, and further improve the quality of inclusive financing programs to ensure environmentally sustainable economic development. Our next strategy is to go digital. Our financial inclusion will be digital financial inclusion, and we want everyone in Bangladesh to have one or the other kind of bank accounts, be it mobile, be it conventional, be it normal. So all of them will have the benefits of the modern payment system. So that's our next move. All the government organs with the lead role of the private sector need to work hard to pace up our inclusive socio-economic growth and development momentum towards attaining higher middle-income country status by 2030 and advanced economic status by the decade of 40s. Central bank itself has been providing the transparency, good governance, good institutions. Would you believe it? 1,041, tenders have been completed through e-tenders in Bangladesh without any question on the governance or any issues. So we want the government should also come forward and then follow this lead, that how could we do this kind of digital kind of procurement and make it a good governance in the system. We also need to put more attention towards long-term mobilization of savings and quick completion of the infrastructure projects. A USD 1 billion taka offshore bond will be launched soon by the Bangladesh government with support from IFC to invest in private infrastructure projects and public-private partnerships. Bangladesh Bank has recently launched a US $300 million investment fund to boost medium and long-term investment, and another US $200 million Bangladesh Bank fund will be launched soon to facilitate only green financing in the productive sectors, including textile and leather. We are also thinking of going into floating sovereign wealth fund, although small amount, to really experiment. And we are opening up, liberalizing our foreign exchange regimes. A couple of industries have already gone out. We have opened up the entire pharmaceutical sectors. If you want to have a pharmaceuticals factory of Bangladesh brand here in SF, you are most welcome. Central Bank will be more than happy to approve that. We are also providing similar kind of support for RMG sector. One industry has already been set up in Addis Ababa and in Myanmar and other countries. They are coming. So we are gradually opening up, but we are being selective, and also we do care for the quality. I don't want to take longer. Let me conclude. The key requisites for upholding domestic demand-driven growth will be the social empowerment of and inclusive financing support for output initiatives of all population segments, and in particular the women empowerment. We from the central bank, we have been pushing pretty hard for the women empowerment. My CEOs will tell you that if they don't give at least 15% of the refinanced funds to the women entrepreneurs, we will not disburse any fund for refinance to them. So they are now taking a special care that we have a refinanced women entrepreneurship. And you won't believe it, 2010 we had about 1,400,000 women entrepreneurs. It has now come to about 44, I think, by 2014 or 15. So it's improving every day. And Bangladesh Bank has its own, focal point. We have a department called Women Entrepreneurship Development, and every bank has to have a focal point and unit so that we are pushing women entrepreneurship and giving them special focus. So that helps, develop the social development. But we don't only look at the domestic demand as we were arguing. Simultaneously, we need to continue our policy support for export-led growth process, which has been, fueling our RMG-based manufacturing. We also need to remove all kinds of anti-export biases, if any, in non-RMG manufacturing for sustainable growth. In exports, as Dr. Jaidi was telling yesterday. I fully support that, but as I said, I want to walk on two legs. Of course, exports will be there, but we also have strong foot on the ground, and that's why we can move better. Adaptation to looming global warming driven sea level rise threats and broader countrywide transition to energy efficient, low emission output practices are the other major new priority areas for attention. And Bangladesh Bank has gone out of the way in not only providing the guidelines to the banks for green financing, for environment and social risk management and grading, it itself has become very green. If you go to central bank now, the entire bank is getting green. We have the largest, solar panels on our roofs. The governor's office and the entire building looks green. The entire building has become green. The water management has become efficient. All LED lights, and we are transmitting this confidence, this transformation to other banks. We're asking the banks to use these solar panels for their ATM booths, for their SME outlets, even for their head officials, and many of them are transforming themselves into green. We are supporting green irrigation. We are supporting biogas plants through our 4-cow model, we call it. We have been providing support for livestock development so that not only that people benefit for poverty reduction, but also we have the biomass which can generate biogas, and that's how we are going into a new paradigm of sustainable finance. I was the member of the International Commission, UNEP Commission on Sustainable Finance. The report has already come out how we plan to really transform the entire financial sector into sustainable financing sector. Although it will be slower, we will not forget the conventional kind of financing for the poor, but our focus will be how to transform the tariff structure, how to transform the lending structure so that we all go green. I think with that green message, let me conclude here. Thank you very much.